Hi everyone, welcome to my channel. This video is for you if you are just at the beginning of your learning to trade journey. I'm going to help you understand what a strategy is, a trading strategy, and how these can help you with your trading. So let's just get into the video. So I've just explained here as a starter what technical analysis is, because this video and this information is based on you applying a trading strategy that uses technical analysis rather than fundamental analysis. So I'm just going to explain here, in case you don't understand what I mean by this, what technical analysis is. So technical analysis is analysing the markets based on the trends, patterns and technical indicators. So I've got the US 100, the NASDAQ here, the NASDAQ index. This is the chart for the NASDAQ. It's on the daily time frame. I've just shown you the typical indicators and things that I have on my chart to help me with in applying my strategy. So I teach a buy the dip strategy and I apply this myself. So I have a number of things that I need to be able to apply this strategy. I have support and resistance lines. My suggestion is that these are essential for any strategy and they cannot be ignored. So I've got a whole separate video on support and resistance, which you can find in my channel. But just to explain briefly here, it's the lines where the price hits these and bumps up or down. The price rebounds away from these lines on a repeated basis. So you can see here it touched this line and went down, touched this line, actually sailed through there, but it touched it there, came down, touched it there, came down. Same here again, you know, it was chopping all along this line and hitting it and coming down. So these support and resistance lines are absolutely essential in your trading. My suggestion would be to never trade without observing them. And if you want to understand how to draw them, you can watch all of this in my support and resistance video, which is separate. It's a whole separate topic. So another indicator that I use in my strategy is the MACD indicator. These types of indicators can give you buy or sell signals. So, you know, as an example, on the setup I look for on the daily time frame for my buy the dip strategy includes that the MACD indicator has made a little crossover between these two lines. So one is the signal line, one is the MACD line. So I want to look for situations where they've just made a crossover like this, either below or on the 0 level of the histogram here. This is the 0 level. So this section here would have been a good price entry setup for me to enter the market. When I see that there, I do go for and look for some more criteria on the lower time frames. My strategy is published on my Patreon account in full, but that's not what this video is about. I'm just trying to teach you what a strategy is and what is, you know, encompassed in a strategy really. So I've just given you the indicators that I use in my strategy as an example. So I have the MACD indicator, exponential moving averages. That's the blue lines. So they're basically, what these do is they're like smoothing the price movements. So I do use these for particular things in my strategy. I make sure that, for example, the price is not below the 200 period EMA. That's this one. If the price is below this EMA, it can mean that the price is downtrending, and I'm looking for stocks and markets which are in an uptrend. So that's how I use that in my strategy. Another one that I've got there is volume. That's these bars down here, shows you the number of people and it's the volume of transactions going through in a market at any one time. So you know, each one of these little candlesticks represents the price movement in one day's trading. I've got a separate video on Japanese candlesticks in my channel. If it's not there yet, it will be soon. So each bar of volume represents the amount of transactions traded within that day's trading as well. So people use volume to I'll do a separate video on volume, but it's basically to get an idea of whether price movements are really genuine and how many people are buying into the movement. So another one that I use is the relative strength index, RSI for short. So that's this one here. You can see RSI, it says there. So at the time that I enter the market, I like the RSI to be low. This can indicate whether or not the price is at a bargain level or whether it's you're not getting it for a bargain. So, you know, typically if the RSI indicator line has gone over this level here, out of this purple section, the price tends to be way overbought, and you're not getting into the market at a bargain, and it's like a danger zone for a buyer, because as you can see here, the price dipped into this level and then it smashed down, right down back to earth. So that's another one that I use within my strategy. So people tend to have a combination of these technical indicators that they apply consistently. So let me just see what's on my next slide. Yeah, so this leads me into my next slide. So what they do is they have a combination of specific technical indicators and particular things that they look for. Like I just said, you know, I'm looking for the MACD crossover, for example, and the price to be above the 200 period EMA. They have a little bucket list of things that they want to tick off before they get into the markets on a particular trade, on a particular stock or, you know, commodity. So the best results that you can get from trading is to understand what your strategy is and apply the rules of that strategy extremely consistently with discipline, especially for beginner traders. So I've given some examples of different types of strategies that you could be applying. So some people trade breakout trades. So breakout trades are, you know, where the price breaks out of a level. I showed you the levels on the previous chart, on the previous slide, where the price is rebounding within a particular level and it keeps hitting it and going down. Some traders wait for the price to break out of that level because it can indicate that the price is going to go much higher. So some traders like to trade breakouts, and there's particular things they watch for a breakout happening and then they get into the markets on the breakout. I currently am a buy the dip trader, so I wait for the markets to come down on a pullback and then I get in while it's in an uptrend. I get in on the scoop and then ride the wave up. Some people like to place consolidation trades repeatedly. So this is where the markets are, you know, consolidating sideways. Consolidation is where the market is just rebounding for a long period of time within a specific area. This is called consolidation. There are some traders that like to trade these patterns. They have a specific setup that is ideally suited towards trading consolidations. So whatever you choose to be your strategy, you want to be applying it consistently. And I'm going to explain more about why that's important as we go on. So just a few more points about strategy. The specific details of your strategy are extremely important. So if you find a strategy that you're applying and then you start messing about with its rules halfway through applying it, so let's say, for example, let's take my example of my buy the dip strategy. I'm waiting for the MACD crossover to happen below the 0 level of the histogram. If I suddenly start loosening my rules and I'll say, actually, on this particular trade, I'm not getting in to it while it's crossed below the 0 level of the histogram, I'm going to get into it, you know, where the crossover's happened above the histogram. Or let's say another important one is, I told you that on my strategy, I wait for the price. I only get into buy orders where the price is above the 200 period EMA, exponential moving average, and I mentioned to you that if it's below the EMA can indicate that the markets are actually downtrending. They're not in the type of trend that I want. So if I suddenly start loosening that rule and start getting into markets where the price is below the 200 period EMA, this is what I mean by messing about with applying the strategy rules. So what I want to explain to you is, if you mess about with any little bit of your strategy, it will affect your win rate. And I can tell you the slightest little change that you can make to a strategy, whichever one you're applying, it can impact your win rate quite dramatically. So it really is best, if you think you've got a strategy that works, to really apply it consistently and with discipline, and not to deviate from the rules of the strategy. You're not supposed to force trades or bend the rules just to make more trades. Try and stick really religiously to the rules of the strategy that you're applying. So I've given you this little picture here. It's like a drop in the ocean. If you drop a drop into the ocean, it's going to make massive ripples. This is the same thing. When you change one slight little detail about how you're applying your strategy, it will affect your win rates, and it might not be in a good way or a way that you actually want. So where do you get a strategy from? You can find strategy ideas from YouTube, from other experienced stock market traders for free. I've just given you some warnings here though. So things to watch out for. Avoid traders who suggest you a trade without applying multiple time frame analysis. Multiple time frame analysis is extremely important. I've applied strategies previously on the basis of not applying multiple time frame analysis. These were strategies I learned from other people on YouTube, and they were just telling me a load of rubbish, because the strategies don't work when you apply. In my experience, they don't work if you don't apply multiple time frame analysis. There's going to be more in my channel about what this is and how you can use it in your trading, and I would suggest you don't start trading until you understand exactly how to apply multiple time frame analysis. So just watch out for people who are telling you that you only need to look at one screen. So in the charts I showed you the daily time frame. There's lots of different time frames that you can look at for how the price is moving. I'm going to put more videos to explain all of this into my channel for beginners, but you need to be considering the price movements, you know, within several different time frames, not just on the daily time frame, for example. So another one is to avoid traders who switch from buying to selling within the same chart. Someone showed me an example of this the other day, and I was a little bit horrified watching. So the person who showed me, he's someone who is trying to learn from me. I'm mentoring him right now, and a video that he showed me on YouTube was where the person teaching him said, well, you know, they were applying trades on the basis of the chart coming up like this, buying into it, and then he took a loss because the price started moving downwards. He started suggesting that the people learning from him should start selling at this point. This is just absolute nonsense. Because you need to be checking what the long-term trend is on the other time frames before you decide what to do. So I just be careful about people telling you to switch from buying or selling within the same chart without considering anything else. And just a little word on this. Well, for new traders, it can be really tempting to just want to get into trading and start placing lots of trades. So the reality is trading is not like this. Half the time you're waiting to place trades. Today I'm not placing any trades. I can see the markets are not in the right place, and I'm an experienced trader. So I just want to give you a realistic understanding of how many trades you're likely to be placing if you want to be successful. And yeah, I can see the attraction in these types of strategies that are advertised on YouTube, where you're just constantly buying and selling. Whatever the price is doing, you're buying and selling. These strategies do not work, and you are going to lose money. I can almost guarantee it. Obviously, I'm not telling people what to do. You can go and experience them and let me know if you think they work. If you have a bad experience, let me know. I'd love to hear from you about how you get on with them, because I personally started out trying to learn from people in this way, and I can tell you I didn't have a good experience. And as an experienced trader now, I understand why these things wouldn't work. You have to have a bird's eye view of the price and where it's going before you start deciding to buy or sell. So that's the reason they're just not going to work. Another little red flag for you. Avoid traders who teach you something that they don't apply themselves. So, you know, my experience, the bad experience I had where I was applying this strategy, the trader I was learning from told me I would get a 60% win rate, and I actually ended up with a 40% win rate, and over a long period of time I was just losing money. But what I found is that when I went to Patreon, I saw this trader teaching people who are paying him a completely different strategy, and he's not applying the trades that he teaches on YouTube himself. He's not making money with those strategies that he's teaching on YouTube. So I don't understand why he's teaching beginners to do these things. You know, obviously it's just so he can sell videos or something. So just be wary of people that are doing things that they don't do themselves. And in the interest of in light of the bad experience I had, since I've been teaching people to trade stocks and help people understand the markets, I do publish a buy the dip strategy on my Patreon account. You can find the full details of that. But what I also do is I publish reports from my broker explaining, giving you my win rates on all the trades I place. I disclose all of the profits and losses that I make. You can find all of this on my blog linked below. And I also I do the trades myself. I apply this strategy myself. You can see videos of me doing it on Patreon. You can see trades that I've placed on Patreon. So the ones that I call out in my Patreon channel, unfortunately I can't share them live because there are legal reasons why I can't tell you which ones I'm going to get into. I'm not allowed to induce people into entering the markets as someone who's not FCA regulated. That's the reason. But you can see the history of what I'm doing. You can see me filtering my stock lists, looking for my buy the dip setup, and then you can see that, a couple of days later I did get into the markets on that basis and I made a profit, and I explained the profit that I made, and it tallies up with what I'm teaching in my strategy. So if you can find people, it doesn't have to be me, it could be anyone. If you can find someone who's completely transparent and open and honest with you about what they're doing themselves, this will help you, I think. So just some more notes for you about applying strategies. You'll likely get an idea of whether or not it's working within 15 to 20 trades, but expect to trade 100 times before the rate settles down. So I've said here the rate of success will tend to a particular percentage, like this graph. It's choppy at first and then it fluctuates back and forth until it tends to this line here. It's actually, funnily enough, this is like 0.6. It's the win rate that I get. So I've said to you here what my own trading looked like. My win rate started as 100% and it gradually decreased to 65% by trade number 24. Now I've placed hundreds of trades and my win rate is always about 60%. It doesn't really tend to move very much. Keeping a trading log. So it's a really good idea for you to keep a trading log. Excel is easier, but you could keep a book, a little notebook. So some suggested notes to keep in your log: the entry date and time. This is so you can go back and check what the charts look like later. The close date, the market name, the type of market, so whether it's a stock, commodity, an ETF, the profit or loss, suggested just P or L, so you can filter on just profits or losses in Excel, and possibly a screenshot of what the charts look like. All of this is going to help you to go back and filter things so that you're going to be able to see whether you keep getting losses on a particular market. And I can tell you that sometimes there are nuances about particular markets where you might keep getting losses for a particular strategy on a particular market. So an example for you, on my buy the dip strategy, I tend to avoid trading the FTSE 100. It's quite a choppy index to trade. I can't tell you exactly why I get losses on that, but I do, and I can see it in my data. So this is an example of why it's good for you to be able to filter on these types of things. So you can, when I filter on ETFs, it's an ETF the FTSE 100, and then I can quickly pull up all of the results I've got for trading that market, and I can see that most of them were losses. So now I just avoid trading FTSE 100. I can eliminate it from my plan. So this sort of data, it's a pain for people who don't like doing homework as such, but it can really help you improve your trading and your win rate. I might publish a template for you to use. I've got one that I use regularly, so just watch out for that on my blog or in my YouTube channel. So that's the end of the video. I'm sorry it's a bit long, but I hope you found it helpful. It's designed to help beginner traders understand what a strategy is and how they can get started, really. So if you think I deserved it, it would really help my channel to grow if you could give me a thumbs up. And I'd love to have you as a channel member, or for you to subscribe. So thanks a lot, guys. Bye.